Hello, everyone. Welcome back to howtotrade.com. I'm Shane Vernier, and this is the U.S. mid-session brief. Today, we're going to talk a little bit about Thanksgiving Day trading. We're already seeing liquidity leave the market. We are seeing some negative price action here hit big tech. Really, the big loser today is going to be the NASDAQ, off of just a little bit more than 1%. We'll talk about potentially a pullback buy there. The U.S. dollar is sort of hanging out right around that 106 level. Lost quite a bit today, though, off about 1%. That's huge as well. We saw some key, really some key economic fundamentals come out earlier today. We're going to sort of briefly touch on those, and then we're going to sort of strategize for the next probably 36 hours. This is not necessarily the best time to be trading. It really isn't. And what happens is typically around a Thanksgiving Day holiday, you're looking at a Thursday market closure here in the United States. So tomorrow stocks will be closed. Commodities and commodity futures are going to be sort of on an early halt. So we need to be very careful with what we do because the liquidity is not really going to be there from the United States, the U.S. traders. But we are starting to see, and you're going to see it probably in the next hour or so, you're going to see that these the participation is going to leave the market here relatively soon, and that's going to have to do with people just wanting to go eat their turkey. So you got to make sure that you know when to trade. You don't want to really push the pace right now. That's what I would say. Be very careful with what you're doing. I don't know that today's the day to take huge risks. Believe me, next week's going to be great. We're going to be back at full strength next week in the markets, but realistically, we've got about 2 weeks left in the trading year, and then right around that second week of December, things really start to dry up typically. Now, this year may be a little bit different because we do have a new administration coming in. We've got a lot going on the Russia-Ukraine front. We're not going to cover that today. It's been sort of a quiet news cycle. We've been covering that all week, but still, that's the number one market driver in the world right now. So, good to see everybody back in the room. Nice, always a pleasure, guys. Let's see, Mark Corp, good to see you. JC, Dibble, always a pleasure. All right, dollar index right here, monthly chart. What do you got? You got sort of a breakout. We've talked a lot about the DXY and the U.S. dollar having a big time topside potential. I just don't really know that we're going to get much of a movement right now. I think that we're off about 1%, 0.83%. But today's really sort of, I won't really say it's true price action because, clearly you've got a sell-off, compression break. You do have that. But, is that because we have a tremendous amount of sellers in there? Or is that because maybe there's just not as much participation? So I would be very, very careful with my volumes today. I would be watching spreads. The spreads are going to be all over the board here in the next couple hours. I would be very careful with the spreads as well. Bluefin, good morning, Shane. 5 a.m. start. Wow. Good for you, Bluefin. Yeah, today was just sort of been putting together a few different projects, but to be real honest with you, I'm sitting on my wallet today. I'm not interested in taking any risk just ahead of the Thanksgiving holiday. We were going to go early today and sort of cover that U.S. Open, but I thought, you know what, it's better just to set the table and get ready for what we're going to do here tomorrow and Friday. So right here, DXY, you can see there's your nice big sell-off. Do I want to buy it or sell it? Well, I mean, if I'm trading the DXY, I know some of you do, this is a pretty good dip. And we're going to have a Fibonacci retracement that is definitely in play. And right there, you can see our weekly chart. Spike low, spike high. What do you got? 50%. I'm not really a 50% trader, but I like the back end of our golden zone right there at 105, probably 105 and a quarter. That's a pretty darn good area. That's a pretty darn good downside support. So I'm watching that relatively closely. The other big story today was Bitcoin. Bitcoin, we talked a lot about buying a dip potentially, if in fact we could actually get a dip to come our way. And right there, you can see there's your high right there, 99.9, somewhere in there. Those sellers, a lot of profit taking right in front of 100,000. A lot of sellers dug in at 100,000. And what you've seen is sort of a pullback, but now we're definitely bullish. We were really we wanted to get that 87.5-ish area. That one's been fantastic for us the last couple of weeks, scalping-wise. But right now, we just really didn't get the pullback, 90,742, and we've sort of exploded back to the top side right around 96. I believe that we're going to see $100,000 Bitcoin probably. It's always tough to put a time on these things because we really don't know, when the market's going to do much of anything. But one thing crypto has a history of doing is on those holidays when all the other markets are closed and crypto's open. It's not out of the realm of possibility to see a big move here in the next 24 hours, and I kind of am expecting it. I mean, if you do take a look at Bitcoin, it's very simple to see the pattern. There it is. Compression, break. Now you're getting a little bit of compression. There's your big sell-off. and now you're bullish again. So I would be watching this relatively closely. This 920 strategy, you'll notice you had a crossover back here in middle of October, and that was down around 64,000, if you can believe that. A lot of folks that were playing maybe a 5,200, something like that, like an investing strategy for Bitcoin. That was a big-time signal to buy the market, and there it is. You can see exactly how that worked. That's without any other confirmation, just a simple crossover. When you're playing a daily chart or a longer time frame, a lot of times those crossovers by themselves are extremely important, and that's just a good look at a 920 daily trade that got you in on a fantastic trade. Now you can see this is sort of what we call the weave that happened back sort of in early October. There was sort of your idea that you're going to sell. You'd have been selling right there, but once you crossed back over, you've got to flip your direction there. You at least got to exit up here, but definitely that was one of those crossovers that made folks a lot of money, made you a lot of money, almost doubled up. Now we're up at 100,000. What do we think is going to happen here? I think we're going to challenge 100 and break above that. Definitely. Let me see, Bobby Bob. Good to see you, Bobby Bob. Bluefin, the EU is going well. I mean, let's go ahead and take a look at a few of these currencies then out of the EU. Euro USD. This is sort of a good look at your 920 again on the daily. Let's go ahead and remove this that line. But right up here, I mean, when you start talking about daily charts and 4-hour charts, always remember if you're working with a crossover strategy, whether it's just a 9 EMA up by itself with the RSI confirmation, or the 920, or the triple moving average strategy that we put out, remember that once it's qualified, you got a pretty good opportunity to make a good trade. And this right here, the longer the time frames really do, they just lead to a much more stable type of price action, just an easier way of executing. Now, the problem with longer time frames, and everybody will tell you that, they're more expensive, and they are because our ranges are bigger. So if we're looking at a daily, that's why most of the traders out there and most of you really, you like to focus on those real tight time frames because the bars are smaller. Something like this, it's a heck of a lot cheaper than playing on, maybe a daily chart. The problem you run into is the price action gets very, very choppy and disjointed. Take a look at this daily chart right here. I mean, this is really a beautiful trade. This is what we've talked about a lot. Right there, you're over in the RSI on the daily. That means you're extremely overbought. We're looking to sell the market right there. That's going to be, okay, I want to sell. When do we sell? We sell when the 9 crosses over the 20. You can see right there, you didn't get the crossover. Sort of blow it up so we can all see it. You didn't quite get the crossover. You got it right there, though. And that trade's a monster. You sold right there, probably right on that daily close, something like that. Bang, that's your close, that's your sell. And then your top side is going to be what? Your stop loss is going to be right above that swing high. And I mean, that's just a tremendous winner. Your sell would have been somewhere right around 110.68. And I mean, we're down 500 pips from there. So that's a fantastic trade. If in fact you wanted to trade just based on, maybe Fibonacci's or what I like to use, you definitely could be, maybe back up to a weekly chart and find a good long-term anchor point. This is beautiful market structure. It really is. I mean, boom, there's the break. There's the move. Do you want to be short or long right now? 105.64, we're printing right now 105.76. This is a big level. If this area sort of holds up as topside resistance, then the trend's going to continue. If not, if you do break, then you're going to probably break up there to that 107. That 107.07 area, which is a fantastic short as well. You can see you've got that 9 EMA really coming right down on top of that Fibonacci. That would be a fantastic pullback sell with the trend. So if you're trading the Euro USD, I mean, there's a lot going on. If you're long, I don't really have a problem with it. If you're long, just make sure that you have the stop loss that you need to sort of succeed. Meaning, if in fact this level holds, this 105.64 to maybe 77 or 105.64 to maybe 106, if we get that compression there and price fails, you're probably going to continue that trend. The jury's still out for me. I mean, do I want to be long or short? I love following trends. I like swimming with the river. I like swimming with the current. I don't like going against it. Right there, you can see sort of there was your compression. There was your 4-hour sell-off, and your low was right around 105. Let's see, 105.32. So if you already took this short, 105.65-ish, somewhere in there, you got paid off about 30 pips, and now we're starting to grind north. Typically, that's a real sign, especially on the 4-hour chart. That's a real signal that we're going to sort of creep higher. Watching very, very closely. Remember, liquidity is not going to be that great for us. It's not going to be that great here over the next 24 hours or so. It's going to be a lot of liquidity in the United States out of the market, and that's because of the Thanksgiving holiday. Let's see, Hamza, great to be part of this team. Thank you, Hamza. You're always welcome. Everybody's welcome here. We we just try to get in there and see if we can shed a little light on what's going on in the markets and maybe potentially show a trade idea or two. But that short right there on the Euro USD, if you want to be short, you could certainly do that. For me, though, I probably would be on the sidelines. That was a beautiful scalp, and now we're grinding north. I would be surprised if we don't go up and at least build the 106 somewhere in there. But I definitely would be looking at that short. This short up here, the back end of that weekly golden zone, that's a superior trade, and that's up there at about 107. Maybe we get it by the end of the week. It's hard to say. It's hard to say. All right, everybody, be sure that if you are, in fact, in the market for a new broker, check out Switch Markets. It's our partner broker here. Get on in there. We've been highlighting this all week long. It's Black Friday. We got our Black Friday special, 100% bonus, $2 a lot cash back and an iPhone 16 giveaway. So if you guys are interested in getting involved and maybe taking a shot at winning the iPhone 16, go ahead and cruise over, get after it, and also the 100% bonus. That's something like if you only have a few $100s, you show up with a $200 or $300 or 200, 300 euros, and you go ahead and double that money up, and that gives you that much more purchasing power. And that's that's the name of this game. It's all about purchasing power. The more money you have, the better chance you have of making more money. How does that sound? All right, we do have to sort of look at our economic calendar today, though, because there's a few things. Yesterday, I really sort of stressed that the big mover and shaker was going to be your RBNZ. Now, we talked about the rate cuts. You can see right there that half a point rate cut really, really brought a lot of participation to the Kiwi. And one of the ones that we highlighted yesterday, one of the pairs that we highlighted yesterday was that Kiwi Aussie. So if you do take a look at this, really a beautiful trade. You can see that was the big move up. I mean, that's just textbook central bank stuff. Anytime you get a big central bank announcement, you see a big-time move in price. Well, take a look at what we had, though. Remember that 4-hour chart we were looking at yesterday? It's good stuff. That sell-off went right down to 38%, right around 90 flat, and then the market absolutely exploded. So we pointed that trade idea out yesterday. That was a big mover. If you guys got that one, fantastic. That was one of those that was really very simple. What happened was our Fibonacci right around that key number. Think about it. Psychology, market psychology, psychological barriers are everything in the markets. And what do you got? You got about 90 flat there. So when you got that pullback and sort of right down to a 38%, that's beautiful. That's a technical level plus an area of natural support, and the market absolutely just blew up. I mean, if you bought down there right around 90s, 90.05s, you're up about 85 pips right there, and a nice move, really a rock solid move. So for right now, what would we want to do here with this Kiwi Aussie? One of the things that you always wonder about is when you see a rate cut, like a half a point rate cut, but then you get a bullish move out of your currency. Now, theoretically, when you cut interest rates, you basically are devaluing your local currency. The idea there is to put more money into the system to get economic growth going, things like job creation and whatnot. That's why you cut interest rates in the first place. Pump the money into the system to sort of jumpstart the economic growth. Now, there's been a lot of talk in New Zealand. I'm not from that area, but I know some folks down there, and there has been a lot of talk about recession, slow economic growth, really just stagnant conditions. Well, that's what the RBNZ did. They came in, they said, listen, we're not going to mess around with this. We're going to slash a half point, and we're going to go ahead and see what happens. Now, just because you cut interest rates doesn't mean that the domestic currency is going to, in fact, lose its value, at least not right away. And always remember that. I'm a hybrid trader, so we understand which news items are going to bring action to the market, and then we fall back on our technicals. We nailed that one. That was fantastic. Went down to the 38% on the 4-hour, and then absolutely exploded. That's good stuff. Let me see. Nice live about a trade. Let's see. Kajiso, good to see you. If we're talking trading, and what do we want to do with this pair right here? I mean, for me, I'm still buying. There's absolutely no reason to not buy on a 4-hour. You can see right there. Something like that would be absolutely fantastic, and you'd have an opportunity maybe to bid 90s, 60s. In my view, the trend is still there. You're still moving higher, but you can definitely see that volume has left the building. Now, from a macro perspective, what can we really say, potentially about this market? Are we going to have an opportunity potentially to sell it? Sure. Huge week. RBNZ gets involved. Price moves. That's just the way it is. Do we really have anywhere to sell, though? Not really. I mean, we can go to a monthly if you want, but you'll notice that this price action is really disjointed. So if in fact you wanted to sell this thing on that big move, more than likely you're going to be able to get an opportunity to do it on the monthly. Spike high there, bang, bang, spike low. Where do you got? 62%. It's right up there at 91.50. So I would be buying short term on those short time frames, but if you wanted to sell this Kiwi Aussie, definitely could wait. I think that probably, we've only got a few more days left in November, and then we're going to have a fresh month, December. More than likely, that moving average, that 13-period EMA, is going to come right down there, and you're going to have a chance to sell 91.50s. That's going to be a pretty good trade. So I would definitely be looking at that. As far as the Kiwi dollar, you see right here, this was a challenge. Now this is another daily trade. This is a good look at that 920 strategy that we worked on Monday, and also with that RSI confirmation. And you can see right here, you're right at the top of it. Now remember, you got to get over 70 on that RSI to be in overbought territory. That's when you want to sell it. We'll take a look. We were almost there. We were right around 69.5. There's the move, and there's the sell signal. So that's one of those that you probably could have sold that and got away with it and just said, I'm just going to play the crossover and go with it. But really, I mean, that was really a sort of a close but no cigar. But if you wanted to maybe say, okay, listen, Shane, it's at 69, I want to sell it, I probably wouldn't eat any lunch for that. I probably just said, yeah, that's a pretty good trade. But you could see right there, that's the big move, and there's no question about it. So now what do you have? You have an interest rate cut, and now you have a big bullish move coming out of this Kiwi dollar. Why? It just means that a lot of people came in and they started trading. Let me see. Kajiso, can I have your group chart? Yeah, just go over to howtotrade.com. Check out howtotrade.com. Get in the trading room, register, and you'll have access to all of our instructional videos. Our YouTube channels are there. You can definitely check it out. All of our resources are available to everybody. Go by, send me a private message. I'll send you your welcome package, and that's going to give you sort of a good look at all of our resources there that you can watch the videos. You can talk trading. You can ask me anything you want. I'll be sure to get back to you in short order. I do have some messages waiting. I'm a bit behind on those today, but I'm going to get on that right after the live stream. And also, we're going to put out a trade idea here in about the next hour and a half. It's been sort of a challenging few days here as far as trade ideas go, but we're going to go ahead and get one out to you later today. Just be careful because you don't know what's going to happen on Thanksgiving. You want to make sure that you don't maybe overcommit size-wise. Okay, right here, though, investing.com. This is sort of our economic calendar, or this is one of the economic calendars that I do, but also check out the economic calendar we use in the room. Be sure just to go click on news. It's just a little icon there to the left-hand part of your screen, and you can get in there and check out what's going on our economic calendar. It's a pretty good calendar. This is a pretty good one as well. I always look at 2 or 3 different economic calendars, and the reason why I do that is because I want to know what's going on from a bunch of different perspectives, and I highly recommend that. I think that's a pretty good advice. As far as, what do we got going today? We had a lot of economic events out. I'm always watching the 30-year mortgage rates. Came in at about 6.86. That was beneath the previous release. So you actually saw mortgage rates come down a bit, and you also saw mortgage applications rise. Now, I would call this noise. At this point, we are still looking at a healthy 30-year mortgage rate, especially after the rate cuts. So right now, the powers that be, the long-term lenders, the institutional money, is not buying that we're going to see a dovish Fed, and I'm not buying it either. I think that you're going to see probably rates higher for longer. We're supposed to get a quarter-point rate cut here in a couple weeks. Whether we do or not, I really couldn't tell you. But what I will say is that you have an opportunity there potentially to capitalize on a stronger dollar, and I'm sort of ready for that. I think that that's going to be the way forward here as we roll deeper into 2025. So definitely watch things like bond yields, watch things like mortgage rates. That'll give you a hint of what the long-term lenders are doing and what they think the U.S. dollar is going to be doing here in the near future. So taking a look at that. As far as the rest of this stuff, I mean, it really just doesn't mean much. I hate to be that guy. I mean, we could sit around and we could talk about durable goods orders and is that important? Is it not important? Right now, it's all about Russia, Ukraine. So think about our market dynamic right now today. Geopolitical tensions, and also a holiday. So we've got weird liquidity. We've got a supercharged news cycle. I think that all these other numbers, we're going to monitor them. We're probably going to get back more into the technicals, the traditional fundamentals in December. But for right now, going into a market closure, for me, these numbers don't mean much. They don't mean much. Now, a lot of people would argue with that, but I'm just telling you straight up. I mean, we could go through durable goods. You can see durable goods are up a little bit. That's sort of a nice suggestion that maybe consumption is going to hold on and be static. Q3 GDP, remember, these are preliminary figures, came in at 2.8%. That's down from 3%. Interesting stuff quarter over quarter. Still pretty solid growth, though. I don't think anybody has a problem with that. GDP price index, 1.9%. That's down from 2.5% previous. That's relatively good news. That's good news because anytime you see that price index, which is an inflationary metric, as it goes down and misses expectations or maybe just goes down from the previous release, then you have sort of you can build a narrative that inflation is in fact coming down a bit. So for me, I'm like, Is it a big deal? Not really. 2.8%, sort of in policy. We came in just a little bit above what we expected. I don't know really what these numbers are going to mean a month from now when they're all revised. The 2024 has been the year of revisions. These numbers will be revised. So is it the truth? Is it not? I don't know. Nobody does. PCE price index, 1.5% down from 2.5%. That's a preliminary figure. Once again, that's a solid number. That suggests that maybe inflation is coming down just a little bit and coming, I guess, into more manageable levels. So that's about it. That's basically what we're looking at today for our economic data. The rest of it, 4-week T-bills, you can see that yields are still creeping relatively high, and those are treasuries, U.S. treasuries. So, excuse me, that suggests that perhaps you're going to have a stronger monetary policy, and it probably needs to be. Let me see. T. Marina, hi, Shane. What is the large amounts of money you've ever lost on a single trade? 2,000. I don't go any deeper than 2,000 on one trade. And in a single day, yeah, somewhere in there. I like to get out in front of the losses, T. Marina. So if, in fact, I'm trading and things aren't going well, I quit. I quit trading. And the reason why I do that is because this game's all about momentum. And if you're serious about trading long term, if you're serious about it and you really say, okay, I want to do this for my life, this is what I want to do, then the number one thing that you have to do is preserve your capital. And there's an old saying that losing begets losing and winning begets winning. So when you start to lose, at least for me, my personality, the way that I am, and some of my biggest losses have always come when I try to fight the market. And what happens is you get in, and typically I'll just run you through a losing day. And typically this is how it goes. I show up, I spot my trades, I'm looking for something, I'm looking to get in there and make a nice trade. I get in and something happens and I lose, or I take a loss. The ones that really hurt is when you take a loss and then the market goes in your favor. That really gets in your head. But when I lose, when I was young and when I was first starting out in this business, the first thing I would do is I would get tough, and I'd say, okay, well, I'd bow my neck and I'd try to fight back, and I'd say, no, I'm making that money back and I'm making more. And what happens is the wounds, there's that old saying, is self-inflicted wounds, they get worse. And from my experience, if things aren't going well right away, shut it down and come back tomorrow. Now, over the years, you start to really understand what you're looking for in the market. So you know that, okay, these trades are going to be good. Like when I show you my macro levels, I'm very confident in all those. But where typically a day trader gets into trouble and a retail trader gets into trouble is the losses magnify. So let's say you show up and you're playing a 5-minute chart, or maybe you're trading, say, gold or something, and you wanted to get long here, but we got swept out earlier in the day or something. The tendency immediately is to get back into another trade because you want to make that money back and then you want to make more. There's nothing wrong with that. But the problem is, and what 95% of the public gets wrong, and I've been guilty of it. I've been guilty of it on several occasions. The problem you run into is instead of maybe pulling back the reins when you're losing, the tendency and what human nature is we go harder when we're losing. And the reason why is because we want to make back the money. We want to succeed. Everybody here wants to win. I don't question anybody's desire here. I mean, you all want to win. You want to make money. You don't want to lose it. And for a lot of us, losing money, it hurts. For me personally, I can't stand losing money. And I've talked to a lot of traders that are just sort of indifferent about it. They don't really care. They say it's a cost to doing business, and it really is. And you have to be able to deal with losses, but it's when the losses start getting big that you've got to watch it. And the problem with that is it's sort of a mushroom effect. You'll get in, you'll take a loss, and then your next trade, you're saying, okay, I'm going to take another trade. Maybe that second trade was mediocre. Maybe it was a borderline trade, and you lose that one. Now you're down 2 trades. You're in the hole that day, and now you're starting to think. You're saying, well, I want to take another trade. I want to get in there and make this thing go. What do I have to put on this one to make it worth it? And that's where the size gets bigger. And that's when you're chasing money. You're over trading and you're chasing. So my number one rule, T. Marina, and it's a great question, I shut it down. So we start going down a couple of grand, I'm finished. I'm not going to stick around and do any more than that because nothing is working. Something's going wrong. Now I have to say, Marina, it doesn't happen very often. I can tell you I took one of those hits probably, 6 weeks ago on a Wednesday, and it was just a really tough trading session. I had made a bunch of trades. I mean, I was trading hard, and I went down about a grand, and then I fought back, and I got up to about 700, and then eventually what happened was I wanted to make that last trade. I was up 7 bills, and I wanted to make that last trade to try to get up over a grand or maybe 1,500 for the day. so I could say, yeah, I had a great session, and I was trying to prove something to myself, and I lost. I ended up taking 2 trades, one bad one towards the end of the day, trading E-mini S&P 500, and that wiped me. I mean, it didn't wipe me out, but I mean, I took a hit, and that day I shut it down for the rest of the week. I said, okay, I got a negative week. I'm going to come back Monday, and then we're going to get it on Monday fresh. And since then, it's been pretty good. So I don't like the stress of losing a lot of money. I don't like the stress of trading huge size. It changes your life. It changes who you are when you take those huge trades. And I'm pulling for you. If you guys are throwing down huge size and you want to win, and I'm pulling for you. But you do have to sit back and say, geez, that got out of control quick. And make no mistake, you can lose a lot of money in these markets, and it can happen fast. It can happen fast. You can also make a lot of money in these markets, and that can happen fast. So if you can flip that dynamic, remember, when you're losing, pull the reins in. Slow down. Don't pile on the size. Don't chase money. Slow down. But when you're winning and things are going well, if you're going to take risks, take them when you're winning, trading with someone else's money. That's how you really pyramid those small accounts into big ones. And it's been done. A lot of traders have done it. They've started with $5,000 and they've run it up into the hundreds. It's possible. It really is. You have to take risk, of course, but the biggest thing you have to do is manage your losses. That's the number one part of trading. All right, guys, let's see a gold market here. I got a little bit behind on the live chat. I'll go ahead and answer your questions in just a second. You can see right here, monthly chart, gold chart. We've just sort of been waiting on this level for seemingly ever. I don't know that we're going to get it. Realistically, 24, that 25 level, love it. I've put that trade ID out numerous times. Absolutely love that one. If you want to just do some intraday trading here with gold, we need to sort of understand what's happening here to the market in general. Nice big sweep. Remember this on Sunday, bang, we had the nice big move. And now we've sort of, I would say, chipped away back into that range. So if you're interested in trading this on a 4-hour, you could certainly do it. But I would recommend stepping back to the daily and having a look at that macro market structure. And there it is. I mean, this is pretty good stuff. We talked about this this sequence here. Spike low, spike high. There was your pullback, faded out right in that golden zone. That's money in the bank right there. We talked about that 2607, 28 level, 2608. That was beautiful. And now you're sort of rotating back up to the bull. So what do you want to do now? I mean, you can do a lot of different things. If you want to just keep those bids down there, you can certainly do that. If you wanted to bid right now, you probably could get away with it. But what if you wanted to sell and just sort of scalp to the short? As far as gold is, you're right there. Spike high, spike low. What did you get? You already got the sell. Right there was your sell, 26.49, 26.50. What was the high there? The high right there was 26.58. And then you got the big rotation back down to 40. Pretty darn good trade. That's a pretty darn good trade. So if, in fact, you wanted to sell again today, I think you could probably get away with selling 26.49s, 38% right there. I would just really be careful with the liquidity here today. What happens when the market dries up and we say it gets thin? That means that there's not many people trading. Now, there's still some volume going across the board right now. I'm not going to say there's not. But what happens is you get in there and there's not enough volume, there's not enough orders at every price point to give you a good look at true price action. And what happens is an institution comes in or they hit the market with a block order and then price absolutely explodes. And the reason why is there's not enough depth there to give us a good look, at what's really happening. So when we say markets are manipulated, they certainly can be. In days like today and days like tomorrow, especially for something like spot gold where the futures markets have an early halt, you could see a big move in gold and the volume may not be there. It may just be a very, very sporadic, very sort of weird spreads and all that. But somebody could definitely come in and hit this market to the long and to the short and really move it. And I think that's very possible here in the next day or so. So be careful if you're trading today and tomorrow. All right, let me see right here. All right, I got a whole bunch of questions. T Marine, absolutely. In a single day, okay, that is comforting. Thank you. Well, I mean, there's nothing comforting about losing money, boy. It wrecks my day. I'll tell you that. Let me see. That's right. Stick to your one-to-one risk. Yep, I do. Pretty religiously, actually. The revenge trades get bad. To answer your question, the revenge trading is one of those things that you don't go there. Don't go there. Because what's happening when you revenge trade, that means you're going to either take a huge position or you're going to take too many trades. And that's typically after a loss. You're not seeing the field very well. You're not seeing the markets well. Slowly get in there and quite frankly, get hot. Make a bunch of good trades. Win some money. Make some money. I always say win because, you might as well enjoy what you do. I see it in terms of wins and losses. And you guys can be great traders and still lose money. I know a few of those. But when you're winning is when you pile it on. And when you're losing, you protect it. It's like that old movie Rounders, the card movie with Matt Damon. He says it's simple. Protect it when you don't protect your money when you don't have the best of it. And when you have the best of it, get it in. And that's all trading is. That's all the strategies and everything. So is this a great trade? 26.49 sells today. It's okay. Is it a great trade? It's already been had. I mean, it's already performed well. Do you want to take it again? Is it still a 5-star trade right now? Probably not. I would probably be careful with that one. If you already got it, I wouldn't be afraid of just taking the money and putting it in your pocket. But if you want it again, if you need another trade again, then you can take it. Just be sure that you stop yourself out, and I wouldn't be doing much more than a 1-to-1 there. So if you were selling 26.49s, probably risk $2.50, something like that, $2.50 on it. 51, probably 51.75 would be my out. And I wouldn't dawdle. If that thing blows up, if gold blows up in your face, you just got to get out. You just have to get out. And it's hard, guys. Believe me, I've fallen victim to getting in the wrong side of a market before and just saying, well, I might as well let it run now. It never works out. I mean, never. So be careful there. The revenge trade. So the focus should be on your risk management and then on profit. Absolutely, Team Marina. What you do is you make sure that your risk is always taken care of. And as soon as your stop losses are down, your leverage is in check, you'll find that the profitability will take care of itself. But the most important thing is you got to know when you're wrong. And when you're wrong, you get out. You get out, believe me. Let me see. Gold is a buy. Let me see. Can I have your WhatsApp number? I'm sorry, KG, so I'm not on WhatsApp. I'm not on Telegram. You can swing by X. Follow howtotrade.com on X. You can also follow me at Shane V Trader. I'm on X if you'd like, and put out a lot of trade ideas. A lot of content goes out there. All right, everybody, that's a good look at gold. Let's go ahead and just run through maybe a few other commodities here very quickly. You can see right here, there's your daily on your U.S. oil. Pretty good stuff down here at 68.42. Definitely what I would call a legitimate support level. Right there, though, nice big sweep low. Then we just sort of grind higher. Now we just took that level out. So I would be bearish here. I'd be looking to sell U.S. oil. I wouldn't be looking to buy it. And the real question is how can we do it? Well, very, very carefully. Relatively simply. Right there, spike high to a spike low. The pullback's pretty much already gone. So going into a holiday and going into a really challenging time to be trading WTI crude with limited liquidity, I would steer clear of this market, at least until Friday. But remember, our long-term level still is there, and it's one that don't forget about it because it's a big one. Here's the chart I show pretty much every day. Remember, true low of WTI crude's right around -40, somewhere in there. Russia-Ukraine spike high on the invasion. That's not the exact number, but that area between 65 and 64.50, that's a big deal. That's a key support zone, so definitely don't forget that. All right, everybody, I'm going to go ahead and sign off here for a few hours. Thank you for joining me this week. Once again, we've talked a lot about Connor. This is his last week, so he's only got a couple live streams left. If you have any questions for him, be sure to reach out. And I know he'd love to hear from you. If you just got anything to say to him at all, be sure to do that. The time's winding down, and then we're going to do some different things with the live stream scheduling as soon as we sort of decide how many live streams we're going to do a day and when exactly those really are going to serve you guys best. It's really all about the traders. So I know I'm in the United States, and I know a lot of you are in the UK and you're overseas. So we're going to have to figure out potentially a little bit better way to give you a live stream that's sort of useful that you can build your trading day around, or maybe just check it out on demand. But I'm thinking about that, thinking about different ways to do that where we can give you, still a pretty good coverage. But for right now, I get a lot of questions. For right this minute, I don't believe we're going to hire another mentor straight away. We may be talking with some folks in the near future about potentially doing some live streams, but for at least the rest of this year and probably through Q1 next year, it's just going to be me, a one-man band. So I'm going to do the best I can to stay out in front of all your needs. Be sure that you send me a private message if you have any questions at all. If you have a specific time that you would like to see the live streams too, just go ahead and reach out and send me a PM as well, and we can go ahead and see about the analytics, if we can deliver the analytics and the trade ideas in a timely fashion that really helps you and you get the most bang for your buck and bang for your time. Okay, everybody, I want to thank you for joining me again. If you're in the States, have a happy Thanksgiving. Remember that I'm going to be in the saddle tomorrow. We're going to live stream. Probably have the turkey in the oven as I'm doing the live stream. But we're going to go ahead and look at the markets. We're going to go through some psychology. Bring any questions you have for tomorrow because it's going to be a very slow trading day, and it's not necessarily going to be a price action bonanza. Friday is going to be interesting, though. And keep an eye on that live stream schedule because it's going to change. Today we kept it the same, but for right now I'm trying to figure out exactly how to approach the rest of this week and then on through the rest of this year and Q1 next year. All right, everybody. Thanks for joining me. Trade the action well, and we'll talk soon. See ya.